What is the process for renouncing your US citizenship, and how do you optimize for an exit tax? As you probably know, more and more people are renouncing these days, and with that comes other issues, things like exit tax, and also even if you're a green card holder, if you're at a certain period of time, you too are considered a US citizen for tax purposes, especially when it comes to renouncing your green card and paying that exit tax. I'm Vincenzo Villamena, CPA, founder of Global Expat Advisors, and we've helped many people renounce their US citizenship, including very high net worth individuals, and optimize for this. So first off, let's just go to the process for renouncing. The first step is actually booking an appointment with the US Embassy. Some embassies it's one appointment, some it's two. And we do like to advise the clients to go embassy shopping, meaning that in their region, there might be some embassies or consulates that have a less waiting time, up to a few weeks, and there are others where it could take a few years. So it's always good to sort of shop around a bit. Now, when you go to the appointment, you need to fill out a renunciation questionnaire. The renunciation questionnaire sort of lists all the questions about, were you naturalized, were you born an American citizen, are you a citizen of another country, so on and so forth. Probably the most important question is, why are you renouncing? And there are obviously reasons about being a closer connection to one country, etc. One reason that's not acceptable to the US government is saying that you want to renounce for tax purposes. Number two is you have to pay a fee. It's actually $23.50. It's gone up in recent years, and it'll probably continue to go up. And then finally, on the tax side, you do need to file your final US tax return as of the day before you renounce. And also, if you do continue to have US source income from rental property, pension, so on, you might even have to continue to file a 1040 NR form once you renounce. Now, the other side of that is filing an 8854 form. And this is a list of your assets and it's your net worth. Why would they ask that? Well, they want to know, are you a covered expat? What does that mean? A covered expat is somebody who qualifies in one of three ways. Either they have $2 million of net worth in all their worldwide assets, and hence you have to fill out that 885 form to show that. Two, as of 2023, you owe $190K in taxes per year over the last 5 years, so obviously you're a substantial earner. Or number three, you're not in tax compliance. When it comes to number three, there are options. We've helped thousands of people qualify under the Streamline program. So even before they're announced, we make sure that they are compliant in order to not be a covered expatriate. So what happens if you're a covered expatriate? Well, there's an exit tax. What does that mean? An exit tax is a hypothetical sale of assets as of the date of your renunciation. So what does that mean? All of your unrealized gains, if you bought a stock for $20 and now it's worth $100, there's an $80 unrealized gain, and all of that is realized if you are a covered expatriate and you're subject to these exit tax calculations. Number two, there could be an entire liquidation of your IRA as of the day that you renounce, which means that you would have to pay tax on essentially withdrawing from that IRA. And if that's not the case, but you're a covered expatriate, you could get an automatic 30% withholding on your pension when you take it out as a non-US citizen. And that's irregardless if you get any type of treaty relief. Again, you wouldn't qualify as a covered expat. So again, these three factors really make it very tax inefficient to be a covered expat. So let's go to a calculation that sort of shows what it's like to be a covered expat. Let's take this client. He was $3 million as of the day before renunciation. Okay, if you look at his assets, he had $500,000 in cash, about $1 million in stock, and about $1.5 million in real estate. If you look at that, again, the basis on cash is going to be the same. It's always going to be 500, right? So there's no capital gain there. The basis on the stock would be 250, so that's how much he bought it. And then again, the day before renunciation, it's $1 million, so that means there's a 750 capital gain there. And then on the real estate, he bought it at $1 million and it's worth 1.5. Again, that's a $500,000 capital gain. So in this hypothetical sale of assets, the cap gain is 1.25 million. Now, you do get a special capital gains exemption. As of this year, it's 821,000. It does go up every year. So if you were to look at this individual, the worth of his assets, or the cap gain of his assets, was 125. He had an 821 exemption, which means he had about $429,000 in capital gains. Okay, that is what's subject to the exit tax. And at 23.8%, that means he would owe $102,000 exit tax. You know what the saddest thing is? This all could have been prevented. Why? Because there is planning when it comes to expatriation. And the biggest thing to plan is called gifting. You can gift your assets to your spouse or your kids or even a trust. Every individual gets the lifetime gifting exemption. And what that means is they are allowed to gift up to a certain amount. At present moment, it is $12 million. Okay, so this person could have gifted his assets, again, to any of these three options, and he could have been underneath the $2 million threshold and not paid exit tax. One important thing to note is that you cannot gift on the same as the renunciation. So what that means is that, again, you would have to gift it 1 year, then wait a whole nother year or January 1st of the next year to actually formally renounce. Another planning strategy for optimizing for exit tax is gifting or expatriating as a couple, meaning one couple expatriates, one couple doesn't. What happens is the covered expat spouse can gift all the assets to the spouse that's staying an American citizen, and you're allowed to gift unlimited to your spouse. That's a US citizen, okay? And then only one renounces, the other one stays US citizen. And what happens is that the US citizen spouse can always sponsor the non-US citizen spouse later for a green card if they decide to move back to the United States. So if you have any questions about expatriating and how to plan for it, book a consultation at Global Expat Advisors and we'll be happy to help.